Well, it's time to take a look at currency markets, and we will be doing so with the aid of some charts. So all of you who love charts, get ready. Nick Twidale is here from FP Markets to run us through it. Hey Nick, good morning to you.
Hi, thanks for having me.
So there is little standing in the way of the US dollar. Give us your assessment of where things are likely to head. I mean, fresh highs for King dollar since October 2022. Oh, sorry, 2002.
So the King dollar short there.
I think we're going to see more of the same. So it's a buy dollar on dips environment without a doubt at the moment. To stop it at the moment, there's not much out there. I suppose you've got to look at psych levels, parities cooling in the euro, and I think that might slow it down for a little bit. But I think we're in short to medium term. We're in for more dollar buying across the board.
Really interesting. I'm looking here where the dollar index got to back in the day when the euro first came to existence. So it got up to over 120 a couple of times very briefly. At 107, it's not that far away now. Who would have thunk it? Let's get to some of the ramifications. Can we go to speak about gold, because that's where it's been just brutal the last couple of days. Broke a key technical level and it's just gone splat.
It's just got smashed, hasn't it? And I think it's like each currency or each commodity is taking its turn on a daily basis. It's like which one's next.
Yeah.
And I'm not quite sure where we're going to go. We have got non-farms coming up, and we have got some key data, but I think just looking at everything, it's lining up for more dollar buying. So I think gold's any rally, people are going to be looking to get out of any long positions they've got left, and looking for those key technicals on the downside as well. I mean, looking at that chart there, that was a key break, and that's the daily chart, and it's just taken us down. I think that next level coming in around sort of 1700. If that goes, we're talking hundreds of points straight away. It could get really nasty really quickly.
Gold bugs will not be liking that one. What about when we look at the implications of, well, I guess we're going back to sort of dollar now, but implication for the Aussie, because if you look at the overnight period, the Aussie dollar actually held up relatively well in the environment when we saw the euro, continuing to crater and everything else as well.
I think the Aussie's probably, and I think the Aussie's second to the CAD. It's had the best performance apart from the dollar over the course of this year, and there's been very good reasons for that. And most of it's commodity strength. If we start to see those commodities falling off, and I think one of the ones that we were looking at, oil's just sort of had a little bit of a break to the downside, which might affect CAD more than Aussie. But if we start to see that hit the Aussie dollar or commodities turn, then we could see a little bit more free fall for the Aussie, like we've seen in sterling, like we've seen in euro. If it holds up, then the Aussie's going to be the one that you probably play on the crosses against these other currencies.
All right, so this is the hourly chart for the Aussie dollar, and yeah, just dribbling along that support for the time being.
It is crawling lower, isn't it? And I think, if we do get a breakdown, the good thing for Aussie bulls, I think, is there's normally a fair bit of options interest at every big figure, and that slows it up very nicely. But we are down, and we are down even from a couple of weeks ago. I think we were sort of above 70 then, and it is going lower. And until this dollar outlook changes, Aussie's going to be feeling a bit of the brunt of it.
Yeah, but what you said that what could cause free fall is to see a drop in commodity prices, but we have been. I know that you've referenced oil in relation to the CAD, but what about copper? What about tin? What about nickel? I mean, they're down significantly. So far this month, copper's down 9%.
You'd expect to see Aussie a little bit lower on that as well, and I think that's where this timing thing comes in at the moment for me as well. I've got no real explanation why everything's taking turns, but maybe the Aussie's got the next turn because those reasons are there. That I think was a key break for me. When
you say that, so explain to the people who don't understand the charts. You're talking the bottom red line?
Yeah, that bottom red line, that's a daily chart. So that goes, as you can see, all the way back for the lows we saw down in Q2 2020. That was hitting, and it respected it really well over the course of 2022, as you can see. And that break came through. They're big moves because it's a daily chart. As it's come off, it hasn't probably come off as hard as I thought, but I think we're still in a sell zone there. And as you can see, there's not really much until you see sort of that congestion that's all the way back around 64 cents. I think that's probably our next step on the way down. Now, how quickly it goes will be dictated by a number of factors. I think the dollar data coming out, anything we continue to hear from the Fed and anything from the RBA. We've got to take into account the RBA that maybe they've helped a bit keeping that Aussie strength in. Like we were talking about only a few months ago, we were talking about rate hikes in 2024, and we're already, we've seen very quick ones from the RBA. Maybe that's what's helped the Aussie just keep a little bit of strength relative to the other currencies, but the next move I feel is probably further.
We know that risk sentiment, of course, plays a pretty key role in what's going on in the Nasdaq. It's managed to go and stabilise recently as well, so has been moving in lockstep with the Aussie on occasions in recent times. So keep a close eye on that one as well. You mentioned the euro.
Yeah.
When we were speaking on air not too long ago, and I said to you, is it inevitable that we're going to see the parity here? And you said pretty much yes. And we're not far off now.
I'm living off that one. Yeah, that was great. I think we were about 106, 107 then, weren't we? And here we are under 102. I mean, and that chart's sort of been something I've been watching for a long time. As you can see, we broke that key level just underneath 108. It bounced and tested it a few times, and then here we've got that move, and it was brutal just 2 days ago. That move, London opened and we just went 60 or 70 points, and then we went another 60 or 70, and it's been a continuation since then. So any rallies I think will be sold into, and then when we get to that magic 1 number, I think there's going to be a lot of fun and games around there.
Ooh, okay.
Do you reckon the ECB is going to actually get away with trying to go and hike rates into an environment? Because all I'm reading now is that there's going to be a recession, but the only question is going to be how bad will it be?
I think it's a problem for all central banks as well, and ECB's probably got the biggest problem going because of the fractured state of the union. So I think they're in a harder place. They're between a bigger hard place and a bigger rock than many of the other central banks. So I think you're right. Maybe they're the ones that could see the euro in free fall.
What about the pound? We've got the very big likelihood that there will be a new prime minister at some point. Boris Johnson it could have already happened. Why is the pound not getting hammered even harder today?
I think it's due for, I think it's like the Aussie. I think it's due for even more of a hammering. I mean, what's going on over there? And I was talking to some key financial advisors last night, i.e. my mum and dad, who are all over the geopolitics, as the older generation tends to be. And they're just saying it's just a mess there. So you look at the geopolitical side of things, you look at the numbers that are coming out of the economy, then I think sterling's in for a very rocky ride as well. And the case is, what do you sell it against? So I think you do sell it against the dollar, maybe not so much the euro anymore. So maybe, that's where your money might be safer against the euro in sterling terms. But I think, once again, same situation with most of the other majors. It's a sell on rallies and it's a sell on breaks as well. Looking for levels in the pound's a tricky thing at the moment because we've broken a lot of key. But, where are we now? 118s, 119s. It could easily get down to 110 very quickly.
I was looking at the betting markets for whether Boris Johnson will survive by the end of the month, and I can say there's some pretty good money to value.
They've got like signs outside of shops with the odds right now for his survival. But one last question: if you called the euro so well and you're calling gold, what about crypto?
I think we might see a little bit of this dollar buying come in against crypto as well. I think it's another one of those commodities that we've just sort of looked at. We've seen Bitcoin base, and obviously a lot of us pay a lot of attention to the Bitcoin. We've seen it base. It got through that 20,000. It's sort of held in there really nicely. Maybe a bit of institutional interest. I know there was a lot of institutions that were looking at that 20,000 level, and they're sort of happy there. But if this dollar buying continues, I think you could see a bit of a capitulation in Bitcoin, and 10,000 could open the way because there's not much between 10 and 20 from a technical perspective.